It should, oh, you know what I gotta do? I gotta go to live chat here too. Hold on. All right. I don't know if that helps any. But yeah, when you guys get a chance, give me check. Oh, okay. Audio should be good. What's up, Struck? I don't know why I'm screaming. What up, Struck? I'm just DraftKings misses by 14 cents. Let's see what this menagerie looks like. This whole growth underbelly has been lit on fire. Pins.
STZ Constellation Brands.
Constipation Brands.
CEO Sandy Tango Zulu.
Look at this pins. What a debacle. Where's the stock now? 15. Amazing what they've done to some of these stocks. All right, let's get rolling here. Let me mute these guys. Hold on. Because I got to keep an eye on the clock. I got to leave roughly around 5. Not 5 on the button, but I got to keep track of time here. I can get lost rambling. All right. Hope everybody's doing okay. Definitely an interesting market out there, to say the least. Again, nothing really new, but a lot of things have come to a head. We'll talk about that. AI related, a lot of, initially was stuff that's been under pressure already, but now it's starting to spread into other things that, on a short-term basis may be somewhat of a concern and something to be careful about. I think for what we have been talking about the last couple of weeks, I guess through earnings season, right? What we've been kind of focused in on, the toughest part about that has been to kind of stay patient, right? Because we've been caught in the middle, I guess is the best way we can put it, where a lot of this stuff that we want to be involved in, a lot of the stuff we want to be bullish about, has really caught fire, right? And one thing I learned early on in this game, and even though this market, this day and age, you could get away with it a lot more, because things get really extreme in either direction. But one thing that I really kind of trained myself to do over the course of my career is, even if you're bullish on a certain thesis as it's playing out, you want to be prudent about it, right? You don't want to go, you don't want to start chasing things that may be overheated, overextended. No matter how bullish you may be regarding these sectors, these pockets of the market, there are always shakeouts. There's always corrections. The problem with that is that, especially in this day and age, the pullbacks don't come when you want them to come, and they take a while to kind of manifest, right? And that's been, I know for me, kind of the most difficult thing to kind of get a handle on the last few weeks, because you got breakouts, you've had breakouts all over. Like if you talk about the pockets of the market, okay, and again, it's not small pockets of the market. You're talking about huge sectors, huge chunks of the equity universe that we want to pay attention to this year, what we wanted to focus on. You got breakouts, major breakouts all over the place. Even the laggards, which, again, I totally was okay with some of the laggards remaining a laggard for a little bit of time because they had some issues to work out. But even the laggards have shown some life. Okay. Again, I think the unfortunate thing over the last couple of weeks is that just this stuff has got, it's just cooked. I can't put it any other way. I think this, and I've showed the STEAMROOM, you folks have seen this way too much this week, but I've been posting this to kind of get a handle on, where we're at, where this market's at. And you look at all these groups from the middle up. This is basically what we want to be long of, right? We want to kind of stay away from the bottom half, mostly, not all of them, but mostly, okay? The bottom half, tech, NASDAQ, the more speculative stuff, trades when the flow is accommodating and they're at decent spots. But the stuff we want to focus in on is the parts of the market that have been underowned for what feels like ages, right? They got materials, energy, Utes. I would put some of the Utes in there. You got AI utilities that are crowded, and then you got defensive utilities which are not. But real estate, industrials, parts of SPY, the equal weighted ETF, RSP, which we've been talking about a lot. Even part of consumer discretionary, and even healthcare is a group to kind of keep an eye on. The only group here, as far as cyclicals, that has been under pressure of late and figures AI wrapped its tentacles around there to create problems is the financial sector, right? And this started recently here. The financials were in normal kind of digestion after being quite bullish for a while. And then you get this AI news that weighed on Schwab. I don't know if some of you are not aware of what went on. I think it started with Schwab and it kind of spread out to real estate, commercial real estate, and REITs and stuff like that. But you can see quite the sell. Again, on a short-term basis, definitely exaggerated. On a big picture kind of view, really nothing, right? It's just things happen really quickly in this market, okay? But what I'm getting at is this is the risk that we're trying to avoid, even being bullish on a big part of the market, okay? Is that when things are overheated and any negative news steps in, you're gonna get your rear end kicked, right? On a short-term time horizon. Now, that's where, and as far as patience is concerned, that's where I try to stress, and I know it's easier said than done, but that's where I think the opportunity lies. I think once this stuff corrects, right? So then what I think you're going to have going on is once this stuff finds some selling, and it did today, some of the pockets were green and turned red. If you get a rinse in these groups along with everything else, that's the type of rinse that I think sets up kind of these sweet spot entries. Now, to repeat, this is nothing new. We kind of been talking about this, right? A lot of us who are bullish want this. The difficult part has been you get days like today that last a day or two and they snap back the very next day, right? And then all these groups, what do? They get even more stretched and even more overheated. And that's not what we want to see, So that's been the main issue. And I think nothing changes here, right? Depending on how aggressive you want to be, and each and every one of us is different. Again, I'm not ashamed to admit at the point I'm at in my life career, I'm a lot more conservative than some of you gunslingers out there that want to be active every day and need something to buy every day, right? I can be a little more patient, disciplined, but depending on kind of your scale of how aggressive you want to be, the goal has been simply, and this is still the case, so I might as well start here, okay? You remain tactical in these overheated groups and try to play off momentum, right? Especially if laggards are getting involved, there may be some trades there, right? Because they're playing catch up, they're not as extended, and maybe you can make some money while we're trying to wade out kind of that cleaner rinse, that highly correlated rinse we're looking for, okay? So there's still opportunities here, right? Because there, like I said, there's a lot of breakouts here. There's a lot of stocks acting well. We just talked a week or two ago about some of kind of the lagging names, like in the transportation sector, the UPSs of the world, stuff like that. They're not laggards anymore. They really heated up, right? But as there's momentum, you can kind of get in the middle of it and try to make some money and take advantage of that momentum if you're looking to be aggressive. Right? But ultimately, the goal is these are the things we want to stay focused on and look for opportunities once they pull back. Right? And this pocket down here, again, that's where everybody wants to find opportunities. That's where everybody's looking on a day-to-day basis. Even as all the money's been made here, they're still looking here, trying to pick bottoms and getting their hands chopped off. Right? And again, there'll be opportunities here, but here's where kind of the steam room plug comes in. And it's the only thing I know. For me, I would want to see a really, really good-looking, aggressive buying step in to these NASDAQ or speculative pockets for me to even think about not rather buying something cyclical, if that makes any sense. All right. But if they come in off a correction like we're seeing now, and we see aggressive accumulation in a software name that's, been completely wiped out, and you like it with some time, you don't need me to talk you out of that because I prefer cyclicals. I just wouldn't put right now all my eggs in that basket because I think the opportunity is still here off pullback. All right. So that's kind of where we're at. Here, any decent flow off a pullback in the cyclical groups, that's where we want to be looking for opportunities. And the other group, we want really the buying the flow to force us to consider for now. Okay. If we get more of a pullback, okay, overall, and you get that, that kind of what we're talking about, and we'll touch on that in a second as we look at some of the stuff we look at every week. You get a decent vol pop, you get correlation, you get a nice pop, and you get that widespread selling where everything is just completely washed out. Again, sweet spot. That's where I think you can probably broaden out in a sense. Right? You don't have to be as strict in regards to just cyclicals. You can look at the other stuff as well, because what happens is when the turn comes, everything is initially going to see a nice bounce. But for me, like you got to see that sell first, right? So what do we mean by that sell? First of all, what's likely to happen is you see this board here we're looking at lit up in green, not red. Right? The majority of this stuff is going to be lit up in green when you get that type of rinse. Now, again, this was coming into today. This is going to look different after today's action, you would think. Okay. This is something else we like to look at. It's short-term sentiment indicator, but it's kind of, I would say, in the middle of short-term and intermediate term for a lot of the way we trade. It's not extremely tactical, but again, here, you get readings under 10, and that's usually a nice slingshot spot where when the turn comes, you don't have to be worried about getting out that day because it'll fade and reverse. It's got some legs to it, right? Multi-week type of leg rally to it. That's under 10, right? Under 20, that's when we want to start looking at kind of cyclicals and names that are catching aggressive flow, right? Be a lot more selective as far as stock picking. But where were we coming into today? I mean, we are over 70. So, right, you could see like kind of these give and takes, even though the equity indexes as a whole are chopping around, we kind of pull further away from ultimately what we want to see here, right? And when I say ultimately what we want to see here, what's likely to happen, okay? I'm not saying we need some deep correction, but there's likely going to be some sort of shakeout that at least feels like a correction. And right now, what we're seeing is we're basically have seen rolling corrections go from kind of the NASDAQ, the more speculative parts of the market, and spreading from there, right, little by little. And usually it spreads everywhere before it's over. And that's kind of what we're waiting on here, okay? Here's some of kind of the big picture indicators we like to look at, right? we look at VVIX, and I love to look at VVIX, and I look at VIX and TDEX, kind of looking for these divergences, because a lot of times you'll see bearish divergence and the equity markets rallying, but it really doesn't look healthy. And that's one of the things you'll see is, divergence in volatility as well. You get that chasing in the option space, chasing of calls that creates vol kind of the lift. And you can see here, right? Like, even as equity markets, depending on what day, you got the Dow at new high, equal weight making new highs every day. ES has made a new high. You got these higher lows in VIX, right? You got these higher lows in VVIX, in TDEX. All right, so just again, not a healthy move, not a healthy move. And when you see these bearish divergences start to show up, that's usually a warning sign that there's going to be a rinse, especially coming off a rip. All right. Here's the inverted VVIX we like to look at. And now you can see the equity market caught down. Prior to that, you had that divergence where VVIX was not moving higher with equities when you invert it. All right. So we'll see now. Again, equity market has caught down. You got the CPI tomorrow. We'll see if it ends there or this divergence kind of lingers. The credit market, again, really hasn't been signaling risk on. And not that it's been risk on. It's been a rotation type of market. No matter, again, depending on what you're in, you feel like it's either crash or you feel like it's a raging bull market. I kid you not, I hear both sides on a day-to-day basis. I got, and we talk about this, I mentioned to you guys in the steam room, I got guys who I worked with who really got aggressive in these cyclicals, stuff like energy late last year, copper, stuff like that. If you talk to them, they think there's a rip-roaring bull market going on. Right? And then some of the other like retail, guys involved in Bitcoin and these crowded AI names, Mag 7 names, they think it's an all-out crash, a complete debacle. And that's basically what you have. So credit, has kind of been signaling that, in my opinion. It hasn't been flashing these big warning signs that there's a problem, right? In the credit markets are flagging something systemic or an economic issue or anything like that. It's just not been signaling full-fledged risk on, right? The way we look at it, the way we like to look at it. And again, you can see divergence here where, the equity market can, at times, what market you're looking at, it matters, but equity market makes highs and this is heading in the other direction gradually. Okay. Yeah. Not aggressively widening is the terminology, but just not showing the type of risk on behavior that you would usually see in a healthy rally. Okay. And there are reasons for it. We'll talk about that in a second. Besides the dispersion and the aggressive rotation that's going on, there are reasons for that. There are reasons for this rotation. This we look at, right? You guys know I'm a big fan of it. Talk about it every week. This is implied correlation. And, when we get down to a certain level, it creates problems, right? You basically have to dodge a rinse every time we put some sort of rally together. All right? You can't get comfortable. Now, again, there have been ways to sidestep these pullbacks. Not to sound like a broken record, but if you owned these cyclical names over the last 3 months, these flushes really didn't affect you at all. You could have sat through them and unscathed. But if you were in software or AI names or select mega cap names, these flushes would have destroyed your life, as small as they've been. Okay? But even though early on you can avoid some of that pain, as that gets longer in the tooth, there's more risk or less places to hide, I guess is the best way to put it. Right? So when we talked, when it was a problem here was a couple of weeks ago, you see that line down there in that neighborhood. And now we've come off of that, right? The little bit of weakness and volatility that we've had, we come off it. At the least, again, this is personally, there's no systematic level I'm looking at, but at the least, I at least want to see something like we saw back in November, at the least. And I think we'll see that. All right, I think if we're patient enough, we'll see that. And that can create some decent runway and tailwind from that point when we get a turn. But who's to say we don't see something even bigger than that with some of the shit going on out there? Excuse my French. And I don't want to spend too much time on it now. I'd rather go through some of the signals and the important stuff, but we'll touch on it if I have time. This fear of AI being a disruptor, it starts off, it gets ignored, then goes to one sector, people start to pay attention to it. Then when you start to see it spread now, everybody's wondering what's next. And you don't even need to see data that it's moving somewhere else into a different space. The concern about it moving there, they fire first and ask questions last. Right? We see that in everything. We saw that with the fat drug in some of the staple names and some of the pharma names. Right? Before they even thought about nobody was going to eat Doritos and pig out anymore, they took all those names to the woodshed immediately. So that's what happens in that type of fear, that type of scare. So what I'm getting at is, if that kind of is the catalyst behind a sell, maybe there's some more fear than we anticipate. And that would mean higher levels, possibly out of vol, VIX, and this, possibly. But at the least, I want to see it up in this area for me to feel like we have any wiggle room. All right. This is, again, and I want to, this is more of an opinion, right? And I stressed this the last few times I mentioned it. My gut, and I could be wrong because it could be this AI fear, and maybe that can lead to what I'm getting at. But what I'm uneasy about is the reasons why a lot of us who were bullish when things weren't looking good in the market, the economy, have now been pulled away. And now everybody who was bearish on the economy is now bullish on the economy, right? So you got high expectations now for growth in the economy, and nobody is even thinking about rate cuts anymore. They've been completely priced out of March. Now, again, maybe it's because I've been in the game a long time and I've seen a lot of economies and a lot of Fed. Can the economy sustain some decent growth without the Fed pushing rates lower and without the government providing some stimulus? I'm not a big believer of that. Maybe resilient, but it's hard for me to envision from this point the economy going gangbuster without some help, without some assistance. Okay, so what I'm getting at is, I think because of how the script has flipped here, and now everybody's relying on economic growth and not the Fed and not lower rates and all that, we're suspect to the risk of weaker economic data or less than expected economic data that can weigh on the stuff that's been holding this market together, and that's cyclicals. All right? Again, think about where we were in October when we were talking about cyclicals. All right? The only way to buy cyclicals were rate cuts. Nobody even wanted to look at them if you weren't getting enough rate cuts. We got a rate cut that wasn't enough to buy cyclicals. Right? Everybody was waiting for the jobs number to crack and roll over. Right? Everybody was thinking the economy was on the brink and needed help. Fast forward to where we are now, and you got these cyclicals that have ripped. Yeah, anything economically sensitive has ripped. Rate cuts have been priced out, and now you got higher expectations, right? So back then in October, if the economy showed strength, that was bullish cyclicals. If the economy weakened, that meant the Fed was going to cut rates. That's bullish cyclicals. Here now, okay, while you still have scenarios that are bullish cyclicals, we see them every day. If the economic data continues to strengthen, right, that's bullish cyclicals. But you can make the argument now that some of that's priced in, right? So it depends how strong the economic data is. Now, if the economic data starts to weaken and the Fed has no rate cuts priced in, you got a late Fed, right? A Fed that's behind the curve again, and likely to create some selling and a correction in cyclicals. You guys see what I'm getting at here? The difference in setup from where we are now to where we were in October. October, good or bad, was good for the stuff that we were looking at. That's not the case anymore right here. And what I think would be the best thing is you do get that scare, kind of shakes the tree, shakes people out of this trade, and creates a buying opportunity if you think that the Fed, especially Trump's Fed, is not going anywhere and is likely going to be accommodated. All right? But without getting too far ahead of ourselves, with cyclicals coming off a rip over the past 3 months is a lot different than finding an opportunity off a pullback in that space with that thesis. All right. So again, no matter how it gets there, that's kind of where I think, again, with the information in front of us, that potentially how this can play out. The timing of it is impossible. Who knows? I don't know when. How am I going to handicap and figure out when this fugazi economic data jobs number is going to crack? You know what I mean? How am I going to do that? Okay, but again, that's the risk. That's the risk here. And that's kind of why I'm trying to stay patient and wait for a pullback and a better entry in the stuff that we like. Okay, so what you're seeing here is financial conditions, and they've been extremely loose for quite a bit now. All right. So what you start to see when this is in motion, you'll start to see financial conditions tighten, and they don't even weigh on the market immediately. All right. But as they continue to tighten, then equity prices usually pay the price. Okay. So example, beginning of the year, last year, right before the correction, here we were in September, and then we started to correct, if I'm not mistaken, in February, right? So you can see the tightening process while the market was hanging in there. Here, we haven't really seen much yet, right? They've tightened a little bit since the new Fed announcement, the new Fed chair guy. But again, nothing sustained yet. But I think is a potential risk here. And I say risk, but ultimately an opportunity, right? That's ultimately what I'm getting at, is that this is what I'm looking at as a potential opportunity in the future once this kind of unfolds, however it does. And then, the internals of the market, again, have just, they've been crazy because of the dispersion and the disparity in sectors and this rolling correction going on. You had a scenario where for a couple of weeks, I mean, think about this: the new high list and the new lows list were both expanding, right? So both new highs and new lows were expanding at the same time. And from my experience, when that happens, right, it usually leads to a little rinse, at the least a little rinse. I was trying to look at this to try to get an idea of when that happened last. It looked like here in late 2024, but I can't make it out on this chart here, you know? So it would be both these things shooting higher. Okay. Again, what you usually see at washed out bottoms, washed out lows, you see new lows expand. This was the Liberation Day lows. You can see how drastic that was. That was a buy signal in itself. Okay. But what you also see is you see the new high list kind of dry up a bit. All right. So this would come down here. And that happens rather quickly. Okay. But the internals it's been a mosh pit out there. All right. So that, again, this is a lot of big picture stuff, right? And in simple terms, especially for those of you in the steam room, right? What it ultimately means, at least for me, the goal, the roadmap is I want to look for entries on these economically sensitive, these old school, right? Old school economy type names, cyclicals, off pullbacks. All right. So I'd be looking for sweeper activity off pullbacks there as opportunities. And the other stuff, which is, again, NASDAQ, AI related, spec related. Again, you guys know I'm a big spec guy. I love speculative names. Right? I love them just as much as anybody else. But we've talked about this ad nauseum. October, that blow off top was a problem, and we would have to pay the price, and they're paying the price. Okay, they're paying the price. And now you got a Fed chair, and who knows if he's going to stick to what he does. We've heard this song and dance before, but supposedly this Fed chair is okay with keeping rates low as long as they can keep that balance sheet under control and potentially trim it. Okay, that's not on as far as liquidity is concerned for speculative names, Bitcoin and that stuff. That's not the most bullish backdrop, as you can see in a lot of this stuff, right? But again, you know, you had a combination. I muted myself. That was my bad. I muted myself. It's funny how this all happens after a blow off top in October, right? Where news is at its best, where everything looks most bullish, where you got people on social media. All you have to do is buy the Trump sectors and huddle, you know, like you can't see the bearish outcome. And then all of a sudden you start to see bearish bullets all over the place. So I think eventually these things they will have their day. Okay. I feel what we saw last year probably was as good as we're going to see for now anyway. But there are going to be short squeezes in these things because they're heavily shorted. But these things are out of favor and they're tough trades. So for that camp, what I'm getting at before I went into a little rant there, I want to see the flow force me in there. I want to see the flow force me in there because you got to understand there's even sweepers, right? They're not God. There are even professionals that are getting torched in these names, trying to pick lows. So seeing some sweeper activity doesn't guarantee that Oracle's going to find a bottom. You know what I mean? The problem with a lot of these names, you've had too many bulls. So there's no shortage of bulls. So for me, like I want to see these names get to a point where people puke when they look at them. They're already puked out of them, but when they puke when they look at them, they don't even want to look at them, and they almost are ignoring flow that may be coming in, right? You want these names to go on people's do not trade list, and then you see some aggressive sweeper activity come in. That's where the opportunity is offloading those type of names. But again, I'm being drastic, Okay. I'm being way dramatic, right? But I'm okay with that. I don't need to buy these names. Because, the God's honest truth, I don't know what the story is with this AI crap. I don't know where we're at. I know everybody thinks, it's got a long way to go and these names are a great buying opportunity, but I've heard that before. I've heard it 30 points ago. I've always hear that. That doesn't guarantee an outcome in those things. All right. But for me, I need everybody, the majority of people who love them, to start to get cautious on them and want to stay away from them. And then the smarter money start to get aggressive and sweep them up. Right. So kind of that's where I'm at in the two camps. Right. The good stuff, still good, but we want better entries. And the other stuff is already flushed. It's not like we need more of a flush. We need it to kind of go dead in a sense and some smarter money step in and buy. Okay. So ultimately, that's everything I'm showing you kind of is pointing to that in regards to actionable stuff here as a whole. All right. One more thing. I thought I posted it. Because I got a few questions. I'll show you Sharpies too. No real change there in Sharpies. Just Sharpies covered their hedge last week. Here's the other thing I wanted to show you though, because they're a big talk. The systematic fund crowd, right? CTAs and just as much vol control funds. They were kind of on the back burner. Okay, no issue, nothing to worry about. And then as kind of this volatility starts to surface, these trigger levels continue to lift and can get clipped now with some volatility. So what we saw last week, we saw the short-term trigger on many models, Goldman model, Nomura, JP Morgan, or the short-term level got clipped. So what that creates, it creates the flows, these systematic flows to tilt now. So they go from buyers to sellers. So CTAs were sellers all week into a flat tape. Okay, so if the market's flat, they're selling. Why you see even in green tapes, they sell, right? You see a lot of these green to flat, green to red fades because that crowd's selling into it. Okay, the big level is again roughly around 6,700 and change, roundabout. Okay, what that level, the reason why that level is a bit more significant. Usually, short-term level brings volatility with it. This intermediate term level gets them from long to now short. So now they're not just trimming long exposure anymore, they're going net short. And that is a decent amount of supply. Obviously, just their long exposure is a decent amount of supply. Then they'll be getting shorts. The market tends to be quite heavy. Okay. So that's where that is a problem. Interestingly, you have a SPX gap down there too. All right. After that point, if you clip that, the next stage would be max short. And if we ever get there, that's where we back up the truck. That's April lows. So once they get max short, they can't short anymore. They become buyers into all tapes, and you get that kind of that floor put in. And if the market trades higher, vol comes in, you get a real nice tailwind. But we'll cross that bridge when we come to it. Okay. So that's where they're at. All right. So here's like from Goldman CTA model sellers in every scenario this week. Up tape, down tape, flat tape. Estimates skew from 800 million in a flat tape to 11 billion. So it gets worse, obviously, as the market comes in, right? If you get weakness and you start to crack that medium-term threshold, that's when the selling really starts to pick up. Okay. Here's the interesting part here. I think we talked about this. I know STEAMROOM members, we talked about this. This is the vol control sensitivity indicator for vol control funds. And for where VIX has been, it has been unusually low, right around that 0 mark. Which, again, my takeaway to that is, and we talked about this, if you remember, do these systematic funds chase VIX strength, or do they sell into VIX strength, right? So what this has been telling us for a few weeks now, okay, even as vol has come in and the short exposure in vol has grown, that they were more inclined to sell into VIX pops, sell VIX into VIX pops than chase, okay? Last week, we got a little bit of a different look here. You can see it popped up to over 4. It's still not that high. Usually, corrections or the more aggressive sell-offs, you get up into above 6 in that neck of the woods. Okay, like before the correction, the last correction in February 2025, you can see we're about 8. Okay, and that's where you get that exaggerated pop in VIX and the vol products. The higher this is, you get those crazy moves in VIX, right? This has been down near 0. 0 is, especially like 0 or below, is a great VIX sell indicator. Like what you see at market lows, this thing ends up below 0, right? Because VIX explodes, this recedes all the way down. Once it gets below 0, that's usually the top for VIX. So this thing's been hovering around that mark for a while, even as VIX has come in, which again, I don't know exactly why, but for me, it's been a great read on whether the positioning is offsides enough to make a dent. So this has been telling us it hasn't, and that may be starting to change now. All right, this is more kind of neutral now. All right, so something to keep an eye on. I get weekly updates there, so we like to look at that. Okay, so that's, again, big picture stuff we usually look at on this webinar. Very quickly, I want to just touch quickly on some of the short-term stuff. This sell-off today, you got you got some decent stuff contrarian wise. If you're looking for a snapback rally, especially if we get some CPI weakness mañana, right? Hopefully you don't get a gap up. Sometimes the last time we had short-term signals bullish, we got a gap up, but luckily the gap up faded and we had some room to run. So again, we'll see how it plays out off the CPI. Our tactical sentiment indicator, which is extremely short term, is likely going to be on buy signal. That's this. Okay. Came in neutral. That thing's going to be green. Again, that tells us quick snapback squeeze, short term. On top of that, you got the put to call ratios caught a nice bump today. Okay. So the equity put to call that I use from CBOE Trade Alert, 8.9. That's pretty high. Okay. Look at this. Net option delta today in equities, 9.5 billion negative. Crazy. Look at the last 10 million. That was the mock. So crazy sell. Here is again, depending on what put the call chart you want to look at, this is a simple one on TradingView. You can see where it's been, where it's at, right? Kind of get a gauge. We broke even the recent high where we caught a bounce here. So if you get a CPI and you get some selling off the CPI tomorrow, that means like you'll get this put the call to trade higher. You'll already be on tactical bull signals. You want to look for squeeze entries, right? Again, short-term squeeze entries, sometimes they last a day. We're not set up for kind of that multi-week leg squeeze. That's the stuff I touched on earlier, right? We want to see some of the kind of where am I? The intermediate term indicators, short-term sentiment comp, stuff like that, right? Line up bullish. So we're talking about strictly snapback squeeze, where you get things to unwind. But we just got one recently. When was that? Was that this week? Or was that last week? Hold on. So they could be rewarding, especially on a intraday and extremely tight. Here. This, we had similar signals. All right. And this was actually even stronger than I thought it was going to be, to tell you the truth. Last week, yeah. It's crazy. I can't keep track of time. So we're going to have a similar setup like that going into tomorrow. Okay. Just for anybody extremely tactical here. But listen, guys, again, I sound like a grandpa. This market, and Joe and I were talking about this in the room. Many of you guys heard us talk. To me, you got to really look at this game, and eventually, no doubt, it's the only way you're going to survive. You have to be either extremely, extremely nimble, like extremely nimble. And the quicker you're looking to be, you're battling algos and quants and models and machines that can wrap our brains in knots. Okay. But if you have the right information and you're disciplined, if you're quick enough, you have opportunities there off this all volatility. But what I'm getting at is there's no in between, and there's not going to be any in between left at a point sooner than later in this game. You either got to be really, really quick and extremely tactical, or you got to try to slow things down. The player who gets caught in between, right? That in between kind of swing trader who's looking at these day-to-day swings and volatility and changes and trying to handicap that, they're the ones that are going to get their asses kicked in this game. You can see it, right? The more levered ETFs that enter the picture, more futures, more expirations, daily expirations, hourly expirations will be here before you know it. It's complete insanity. It's a full-fledged casino. So you either got to treat it like a casino, and if you do that, to me, that's intraday. Or you got to slow things up, slow things down, and use your discipline and patience to kind of look for opportunities off these extremes when they line up, right? And take advantage of things like that. But the player who comes in on a whim and just wants to gunsling, they're going to get eaten up alive. They always did, but it's going to happen a lot quicker now. Yeah, it's insane, right? It's insane. You could see this happening, right? Little by little, but post-COVID, talk about it's just been on fast forward. It's been something with COVID, right? When everyone got locked up in their house and they were giving checks money to trade their Robinhood account when everything else was shut down. Once that huge retail influx came in, that's when options blew up. Now retail's in options, right? Then you get these levered ETFs. So the volatility on these things, like you got zero revenue stocks that are extremely volatile, and that's not enough. We need double, triple levered ETFs on those zero revenue stocks. Think about that for a second. How psychotic that is, right? Like there's no, it used to be like if you called this game a casino, people would get offended. Like, because, you felt like investors never wanted to be known as gamblers kind of thing. Even traders, even traders. But now no one could get away with it, get away from it. It's complete casino. Yeah, right? Like a levered Rigetti. Who needs a levered Rigetti? Like, what's the law? Besides fees, what's the logic here? Like these moves aren't enough. Stock going from 7 to 60 back down to 7. That doesn't cut it? I guess not. So, but if I'm sure you guys have realized and noticed this already. But if you haven't, that's what it is. So, like me, I'm being dead straight with you guys. Like, I like to trade intraday, but it's a grind for me. I know I'm not getting wealthy trading intraday. Trading intraday for me is basically biding my time, trying to make a little bit of money while keeping me patient for that better setup. That's the way I look at it. Right? I mean, there's others who solely focus on intraday, and that's their livelihood. Right? But it takes a lot of discipline, it takes work. You either got to be focused there, or you got to kind of push that aside and slow everything down and just let stuff set up, let it come to you, and be focused and ready to fire when things align. And keep your focus there. That's the difficult part, because it's so noisy. There's so much action going on. So much action. All right. I just looked the day to day. Like I mentioned, the fat drug was getting rid of soda and all these staple names. They were going to go out of business. Kennedy Jr. was going to put these names out of business, and then you don't even hear about that anymore. It's gone, like completely gone. And now, like this AI thing, who knows, is stemming up the same way. You got software, like software is getting completely wiped off the map. Craziness. Absolute craziness. All right. Let's quickly talk names, and then I got to run. Okay. Again, a lot of these names have ripped. So we're looking for pullbacks, on most of these, especially if you like them. But I still, the one pocket that's been a laggard that I still like are the homies, as you guys know, right? Now, again, they still have issues. Like you look on a name by name basis, they have issues there. So the ETF may be the route to go if you're not a fan of name. The best looking name in the group is Pulte. Looks completely different than some of the others, right? Like really good looking stock. And listen, will this be affected by market weakness, market selling, AI selling? Sure. Who knows? I don't know. But I think what the difference is, it's kind of like that's where I want to look for opportunity, right? That's why I haven't jumped in fully aggressive and name wide. I just own nail, right? I added a little nail to nail, but that's all I own in that space right now. And again, hopefully if we start to see some good looking flows show up, and these things, even just if they hold up well, they don't even have to sell. If they hold up well in a market and show resilience, that would be a bullish sign, So you got the home builders, and then you got these names that I think probably they may even be better. I don't know. People have a different preference. But you got names like Lowe's that looks ridiculous. Looks ridiculous. All right? You got a breakout there. Again, maybe a little extended on a short-term basis. Had a reversal today. Maybe you get a pullback and you find an entry. LOW is the ticker. Home Depot has been a laggard to Lowe's. I don't know why. Usually it's the other way around, but that may be an opportunity. Okay. Home Depot, again, another quality name, has been in long consolidation. Home Depot used to be beloved. Everybody, I used to be on webinars like this. I used to get asked about Home Depot every day, every webinar. Now I hear nobody mention it. Nobody wants anything to do with it. Builder, I know a few of you like. I don't know why I like it. I always have liked this name, BLDR. I always looked at it as like a baby Home Depot. They have earnings coming up. So, see how earnings shakes out. Maybe you get a weakness, some selling off earnings there. There's been some flow in the name, BLDR. But you can see, right? These things are still laggards. They haven't hatched yet, like some of the other stuff that's scorched. Okay. So they could even hold up better, even if you get further market weakness. Another sleeper in the group could be this QXO. A couple of people I know are in this name from a little bit lower. Jan 2027, deep in the money calls last year, late last year, what caught our eye. I think they were the $5 calls, deep in the money. It's a top OI position. It was there last I checked. Some really sharp looking sweeper activity in this name. Somebody betting on the name, not just the trade. And it's got a nice story. Some of you have shared with me with the CEO and stuff like that. So that's another name in the space. But this is kind of the space that hasn't really hatched, hasn't really participated. Other areas, they've come a little too far too quick, but I wouldn't say they're done. They're not, like, for example, chemical names. This guy reports soon, but what I'm getting at is even some of these laggard chemical names, put together a nice rally that we were talking about. Dow, this is one of the better flow names, both of them, Dow and CC. Nice moves. PPG, this has been one of the stronger names. Look at that move. Right? So here's where the problem stems, right? Yeah, this is great. They've come to life. They look healthy, but this is really aggressive. You would think that there'd be a breather here. But in this market, who the hell knows? Who the hell knows? So they were the chemicals, if you remember, we were talking, were one of the laggards along with the home builders and home related names. Everything else, again, I think of like the names that caught flow out of the trannies. Look at this UPS. You don't need me to tell you, a few of you own it. Right? And FedEx is a monster. Is a monster. Okay. If you guys remember, you remember this deer we were looking at as a laggard? Look at that explosion. Look. Bink. Right? XPO struck. You remember you own this XPO? Wasn't this the name you owned? The trucking name? Tranny? Look at this. Was it XPO or where? I thought it was XPO that you owned, struck. I get them confused though. But anyway, they all look like this. Mickey D's, some of these type names. Struck. What was the trucking name you owned? Oh, KNX, not that. KNX. Gotcha. It looks good anyway, right? Looks really good. So this is another transportation name. I get that confused, struck. KNX and the other one. That's PO. So again, these are all, I don't want to rehash this. These are all names we looked at. We were talking about as laggards, and now they've come to life. You know what I bought a little of? And again, I want to stress this is, and I mentioned it to you guys that I was going to remember. I've been talking about it. I finally pulled the trigger and bought some Hertz. So this is kind of a lotto cyclical play for me. Okay, I bought some. I might add to it at some point. I'm not looking to trade this from $5 to $6. I'm looking to hang on to it and hope I get lucky. So it's kind of a sleeper, cyclical name that I'm willing to give a lot of time to. Okay. So again, if this space comes to life, could be a dud with the short position on this thing. Who knows? All right. So it's well worth the risk down here. I like the spot. We talked about this name, right? Hertz. But again, I wouldn't expect fireworks out of it initially, obviously. It's been a dead issue for a while. But if it gets noticed as a cyclical and they squeeze shorts, you got potential fireworks in the name. You may want to just keep an eye on it. And if it sees, if it starts to squeeze, right, and the volume picks up, the flow picks up, you could play it from there like that. Okay. Me, I always got to be in it. Otherwise, I never catch it decent. So I bought some, and maybe I'll add. That and I was bored. I haven't bought a name in a while. What else? The metals, they got too hot. They got too hot, right? I think you need to see these things consolidate now. I know they've consolidated a little bit like copper in there. This is tough for me now. This becomes, like down here, you like it. It's going higher. Here, again, it may need time to digest. But then again, if copper rips, it'll probably go higher with it. But like even gold and silver, I think they hang out here for a while. Like I don't think this starts ripping again, but I could be 100% wrong. I think this is digestion time for this. STM, let's go again. That's ideal stock. Chip, it's a chip name, a semiconductor, and an ADR. So you got double bonus here. You got the strongest sector on the board, and it's an overseas company. And right now, that's been a powerful mix. STM. So if you're in it, I would hang on to it. There are a few of these cyclical semis that look really good. They just, again, they've moved. That's the problem. Here's one. A couple of people in the STEAMROOM own, GFS. You guys have great entries on these names. I wouldn't ruin these entries by adding up here, but I'm just like that. But this should do okay, continue to do well. Again, if we have a highly correlated pull, these are likely going to come down. It's not like they're going to avoid the sell completely. They'll just hold up better, and I think they become buys. There's a buying opportunity if they come in. But the market could weigh on these things. That's the risk right now. What's another these names? Yeah, I saw AMAT in the after hours. But that's been strong for a while. Here's another one, cyclical. TXN, that's been strong. But I don't want to sound like a broken record. They're not a steal anymore. They're not a bargain anymore. They've come a long way. If you get a pullback, you like them, that's where you add. That's where you buy. Yeah, exactly. I wouldn't put new risk up here and ruin your cost here. Wait for a pullback. That's kind of where I'm at, like with IWM. I wanted to come in and I'll look for entries. What else was I looking at? Of course, I botched this whole cyclical, like as positive and bullish as I was in October on these cyclicals. I should have made a lot bigger dent. They're just like a lot of you guys. I'm not a big fan of these names, guys. I don't like playing these names. The equity, the stock, they're pricey, they're expensive, and the options aren't that liquid. So it's really tough to get decent size. You got to buy like a basket, And what a lot of us have learned is that you're probably better off buying the ETF, or start off with a levered ETF and then roll out of that and spread out. But here's another one that we were talking about, the regional banks. This DPST, the 3-time regional bank. Like, look, 80, almost a double. Again, if you held the whole, for the 3 months, So again, like the regional banks, it's tough to find a name that you like, especially one that you're going to size in a decent way in. So sometimes it may be more beneficial to buy the ETFs. You know, what else? Anybody else? Yeah, Caterpillar. Caterpillar had the benefit of the AI boom because it had AI. It benefited from AI. Again, I don't know how, but so I heard. And now you got the cyclical part of it. So it caught both bull waves. But this is nuts now. This is nuts. Like this has been going up for a while now, not since October, for a while. Here's the new NVIDIA, by the way. Walmart. Walmart's more expensive than NVIDIA. So, this is the market we're in. This is the market we're in right now. I'm fascinated by this whole the underbelly and the AI stuff because nobody has a clue, and it's going to be interesting how it all shakes out. Everybody has a guess. Everybody has a gut feeling, but it's going to be really interesting. Because these things, you've had a really nice, just in general, the whole underbelly of the market, you've had a real nice correction. Real nice correction. And remember what we were saying back in October? You guys probably remember. We said you had a blow off top in a lot of these things. Okay. And what would be ideal is they come into this year, after they correct, they bounce and kind of go dead. Right? They kind of go dead. And then as you get into the summer, right, these things are all, they've been dead money, people holding bags. Nobody wants to own any of these things anymore. If this whole trade theme AI is alive, you could start a huge bull run from there. Right? And that would, the cyclicals carry the torch for the first half of the year. And then you get kind of AI inspect, the latter part of the year. Yeah, give or take. But again, it'd be interesting if it plays out like that. If it plays out like that. Oh, what a score. What a score. Madden's talking about that AMAT insider buy, the CEO. You guys remember that? Wow. Wow. That was down here somewhere, Madden. Where was that? That was over here, right? Somewhere where the CEO loaded up. And think about then here's what AMAT did going into that, right? So AMAT ruined people's lives. While the AI boom in the semis was NVIDIA, all those names were going nuts. LRCX, ARM, AMAT was left out completely because it had more cyclical ties, right? And now, look at this. What a score. What a score. But yeah, Madden and I were talking about this yesterday. Just monster breakouts, guys. You're talking about big time breakouts, big names and big time breakouts. These stocks were ignored. You forgot some of these names were even publicly traded. That's how long it feels like these things have been out of favor. The rails, they've been seeing nice flow. Look at this, UNP. Monster breakouts. NSC. And a lot of you don't remember these names when they're in bull mode. These choo-choo trains, when they're in bull mode, woo, boy, oh boy, they can put them up and put them down. When these things are in bull market mode, you know, nuts. Okay, like we talked about, even the steel names, like people don't remember. I remember the steel names were like AI stocks. Steel Dynamics was down 6 today, $6. On the chart, you can't even see it. That's how hot this thing has been. Okay, this was the first cyclical to catch noteworthy sweeper activity in October when we were talking. That's all the way here at the breakout here. You know, new core. I mean, there's so many. There's so many. The financials are going to be interesting. You know, like even the Schwab came in nicely. Let's see. Maybe they sweep it up. Because again, this looks spookier than it is. You got 3 days, or 2.5 of aggressive selling. But, this thing has been bullish for a while now, right? And by the way, another one, Madden, where the CEO loaded up here off the regional banking crisis, I remember. That JPM though has been spot on when the NFP today was classic. Yep, it was. Yep. Yeah, I like those. The Goldman and the JP Morgan guys. Those are the two I like to read. All right. Any ADI that's been a monster, right? See, I would like to see these things cool off. They don't really have to come in. They just got to cool off, and they might be on the way already. Maybe not. Who knows? Yeah. Just like gold and silver needed to cool off, these things need to cool off. Like, again, we don't need to see that. You don't, and with the fundamentals the way they are right now, you're not going to see that. But they got to cool down these things. They got to cool down. Like silver overshot. See, this is the problem, right? You overshoot, okay? And like here, okay? Like it goes higher and people ignore the move, right? Like this running through stop signs. Now, granted, you had another month of rippity-doo-dah, but you don't always get another month. Sometimes it's a couple days. You never know. And then this happens. It's like playing musical chairs. And if you're not out of it in time, you gave it all back anyway. Literally, what it do? It gave back just this move. Where it ran through stop signs, it gave back that move. That's all it did. You understand? This was an overshoot. That's all it did. So, that's the risk if you're buying in things that overshoot like that. You don't know how long this can last. And this happened to give it back real quick in a day, for crying out loud. But anyway, the point I'm making is this area cooled off. Overall, okay, we have to be happy with, and again, I'm not saying I should be happy with people losing money, but what I'm saying is the backdrop, okay, with even though the S&P 500 hasn't gone under a correction yet, Bitcoin, speculative names, beloved names, all have corrected and then some. And what I'm getting at is that's, for me, as a contrarian, that lines up bullish looking out. Not bearish, bullish. Bullish. Like you're gonna have a lot of disgruntled players. I mean, retail seems to never run out of money. These Bitcoin bros, they made a fortune and all these crypto things and selling NFTs and jarred farts. I don't know, selling pictures of their ass cheeks on OnlyFans. There's so much money they made. I don't know where they get it from. But you got a nice chunk of it being lit on fire right now. A nice chunk of it. Yeah, Fastly, I don't know the news, but it's not something I would play personally. I just don't have an interest in it. Especially after a move like that. But it's a hockey stick software name. This was, what Fastly was? I remember like it was yesterday. This was the first name to run into a brick wall out of the COVID bull market rally when the software names were the AI names of now. This was the move in Fastly. And we were like, what is going on here? This thing just went from 10 to 120. Look at it. But, again, this, if you're in it, this is great. But if you're not, this is a problem that the stock pays a price for inevitably. Either through time, lengthy digestion, or crash. And, you're seeing that now with all these speculative names. The quantum names, they're the future, quantum, they're only going to get more popular, but yeah, it doesn't matter, right? Because they did this already. The stock went from 2 to 60. For that rally to keep going, you know what they got to do? Chase chart parts. So this is likely what usually happens is this now. And that's the bullish case. This. All right, where they go into hibernation. Hockey stick. It's insane. A lot of money out there, man. A lot of money. When they said the Fed threw in the kitchen sink off COVID, they weren't kidding. A lot of money, a lot of liquidity. But what I'm getting at is, even though the indexes really haven't done a whole lot, as far as on the sentiment basis, and you see it in some indicators and stuff like that, but the retail crowd they really rinsed them nice here. They rinsed them nice. Now anybody on social media who's pounding their chest about stock ideas and winners, and all you got to do is this, and here's my game plan, and I turned 1,000 into 8 million. But if you didn't know already, which you probably did, 110% they're full of shit. Right? Because all the stuff they were pumping is in flames all over the place. All over the place. From people putting their family members into MSTR, it's the future. Every idea they had lit on fire. Everyone. That's usually how it goes. That's usually how it goes. All right. But I got a jet. It's 5:30. I said 5 o'clock, but that's the story of my life, But anyway, again, moral of the story, really hasn't changed, right? We want to try to stay patient and wait for pullbacks in the stuff we want to buy, okay? And while we're doing that in the interim, the rest of the stuff, the stuff that's now out of favor and oversold, for anything outside of quick trades, you really, personally, if you're in the steam room, you want the flow to force you in. I know that's hard because a lot of those names are beloved names and they're down a lot from where they were. But again, for any edge off the flow, like you want to see real deal accumulation in these names to have an edge off flow. And they're oversold enough, but you want to see some of that sharp money getting excited about it. So that's kind of the roadmap and the game plan for now. And let's see how the CPI tomorrow for Steam Room members. If we do get a little sell off the CPI, we look for signs, especially intraday for a squeeze, because we're likely going to have short-term sentiment signals favorable mañana. ASTR? I don't remember that name. ASTR. This? Pull up ASTR from COVID. I think you got the wrong symbol. That's not it. ASTI? That wasn't COVID, was it? ASTI? I think ASTI is recent here. Solar. Oh, maybe he's talking about this. Oh, look at that. You're right. This, right? Are you talking about this? Astra. No, I don't know. Maybe you got a different symbol. Yeah, I mean, RBRK is a long-term tuck away type of name for me. Otherwise, obviously, I would have taken profits. So anything that stuff like I kind of hold on to in an investment sense, I can't try to pick bottoms and top. See, here's the problem. If I get out of an RBRK, okay, just so you understand where I'm at, right? If I sell RBRK here, I'm never, that was a good move, no doubt, but I'm never getting back in RBRK. I may say I want to, but I'm never going to get back in. I know how I am. So names that I had decent entries on, that I made some money on the trade and I want to leave stock longer term, I try not to fool around with it too much. That's the approach I take. Like, for example, I use this approach. I use this as an example quickly. Okay. This was one of the names I kind of did it with, which is a perfect example. Here's where, come on with this. Here's where I played soon. Okay. And I traded it, but I left a nice little chunk longer term because at the time, it was the first AI name that was catching flow, believe it or not. Like underbelly speculative name. That was here. Okay. Look what I held through before I eventually sold it. Okay. I didn't sell this pop. It came back down. I basically almost gave back all that profit on that piece. I held through this menagerie of sideways action. Okay. Had a little pop here. I didn't sell it. Came back down almost where near I paid. Ooh. Whole lot of nothing again. Then this move again. And then I finally sold it here. Right? Yeah. No. Here. Right? Yeah. So here, I even held through this pump and dump here. And then here I sold at $18. This is not $18. This is $9. Oh my God. So the point I'm making is, look how many pump and dumps I sat through and then eventually sold at 18 because that was more than I was hoping for with the dollar and change cost. You understand? So names that I hold on to longer term, like a longer term piece, I don't trade because I'll never get back in them. I'll never get back in them. And it's backfired. It's backfired, right? I own Chewy still. Okay. And Chewy, most of you know this story. Well, Chewy, I own in my daughter's account, but same thing. Here's where I bought Chewy. I saw this COVID run. I don't know why I didn't sell this COVID run. Like, what did I think Chewy was going to become? Berkshire Hathaway. Like, what was I looking for? But I didn't sell it like an idiot. And, you know, I'm still in it. I'm still in it. Okay. I'm still in it. So I'm just making the point like RBRK is that type of play for me. I'm trying to forget I own it. And one day I get lucky, it's a cybersecurity beast. But me, the way I am trading, kind of these little investments, it's not going to work for me. It's not going to work. Every time I sell it, I get out. I mean, every time I sell it, I never get back in. So I have a couple other names but I made really nice money on these. So these are, I can be patient with, like Wolf. I still got a piece of Wolf that I'm not going to touch. So again, I'm just making the point that I try not to look at them when they're good or bad. Yeah. And listen, like Crowd, you got some real studs that are caught up in this software debacle. And there's probably going to be opportunities in these things. Right? Like you're talking about stud cybersecurity names. But, I don't know. This AI disrupting thing is above my pay grade. I'm not afraid to admit it. I don't know what's at risk. I don't think anybody knows. But that was the long answer to RBRK is a longer term hold for me. Kind of a tuck away name. Yeah, I don't have, the only take I have on SoFi is that it's kind of that new economy type play, speculative play, and that's not the place to be right now. And I know you didn't need me to tell you that, the price action alone, but these are tough. This is tough. Even when this thing was up here bullish, I would have, you probably heard me say the same thing. It's tough right now. This whole arena is they're gonna be winners, but it's like finding a needle in a haystack. They're tough. Like, look here, right? You got a name like this, APLD, that's a winner. There's no doubt about it. Right? Catches nice action, holds a bid, runs on bullish days. Now, if you just automatically extrapolate that to the whole entire group, you got your rear end kicked. Like here is one of the better names in that group, and it's having a tougher time. But again, I would expect this. APLD is the outlier. You understand? They're tough. Like, and Irene, this is bullish, believe it or not. Like we talked about this, Sahil and I. If like you like Irene longer term, you want it to kind of go dead here and stay in a range. You don't want this thing to heat up again. You need digestion here. All right. So this is the bullish case. The bearish case, these things roll over and give it all back. And the story, guys, and you remember we talked about the story, nothing's changed. The story remains bullish. The problem is this: the stock went from 4 to 80. 4 to 80. To sustain that, you need SanDisk, Micron type growth, and that's a supply issue in the group. That's not going to last forever. It's impossible to sustain that type of percentage gain, that type of move. I know, Mario. It happens to me all the time. It's almost 6 now. I got to go, though, before I get yelled at. I really do have to go. Thank you for reminding me anyhow again. See, you guys, I get caught up in conversations here and I forget all about it. Well, you guys know, I would sit here all night long and talk shop if I could. I have to actually run. I'm late already. All right. So that's the game plan, guys. Again, no major difference. Maybe the cyclicals start to see some selling. And that would be a good thing. We look for opportunities there. Well, one last thing, I promise. You got OPEX next week. Okay. It's going to be a tough week. It's going to be a messy week. And sell-offs usually, right, that opens up the window for some volatility gamma-wise and stuff like that. Something to be aware of. But the flow is going to be shitty next week. Okay. So ideally, we get a pull next week, especially in cyclicals. And post-Feb OPEX, we got some stuff to buy. That would be ideal. All right. I appreciate it. Ed, have a great night, everybody. Enjoy the rest of your night. I'll see the majority of you mañana. Later, everybody.